All right, what is up, tycoons? What's up, traders? Super excited for today's video. Coming at you guys with a viewer request for an update on ticker symbol LEASH. All right, LEASH. Gonna break things down on the daily chart for you guys. Go over the daily time frame structure we have right here, as well as go over some of the smaller time frames, so that way you guys can pay attention to some of the key levels and different indicators that I'm looking at. Now, before we begin the video, all right, please remember. All right, none of this video is financial advice. The content provided here is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. I'm not a registered financial advisor or broker. Trading in stocks, bonds, commodities, crypto involves a significant risk of loss and is not suitable for all investors. So make sure to read through the full disclaimer. All right, we're going to get into it and actually go over this ABC structure we have right here, which, if you're not familiar, markets tend to move in both 3-wave and 5-wave structures, right? And so what we have here looks like a simple A, B, C structure. And what we have in yellow, these are the Fibonacci retracement tools. Now, specifically, these are the 3 most common and well-respected Fibonacci retracement levels. We have the 61.8, the 50%, and the 38.2% levels. And the reason I use those is because they help identify trend continuation or trend reversals, because nothing moves in a straight line down and nothing moves in a straight line up. Rather, you get a move down retracement continuation of the trend, or a move up retracement continuation of that trend. And we can see here that we've gotten a move down, a retracement, and then a continuation of the trend for a nice ABC structure, okay? And the way you use the fibs is you take your swing high, connect it down here to your swing low. So you see we had this move to the downside, and in, being that nothing's going to move in a straight line, we actually get a retracement, and you can see we get above our 38.2% level, and we come up close to that 50% retracement level, and ultimately we find some resistance and continue that trend downwards. Now, on a 3-wave structure on an ABC, typically your C wave, okay, is the 1.0 extension, which is why there's a 1 right here next to this number, of your A to B. Okay, so you would take the Fibonacci extension tool, all right, and you would connect your swing high down here and then down here, and these are your 3 connecting points for the Fibonacci extension tool. And then it gives you, I also like to use the 0.786, because the 0.786, sometimes things don't always go to the 1.0. Sometimes they go past the 1.0, but I like to use the 786. So if this, wants to continue bearishness, all right, there is a possibility we could come down to 356.19. But we have already hit the 786, and what we've done is flip that from support, as it was support over here, and we've now flipped it to resistance, and it's been a major level of resistance. But the more times you test a level, the weaker it's going to get, right? Over here, we tested it as support a lot, and it broke through, and now we've tested it as resistance a lot. So 404 is going to be a big resistance level, and if we can break through there, there is the possibility we could get a retracement, just as we got a retracement here, back up towards our major Fibonacci retracement levels of 449, 473, and 498. But we have to break through this 404 and flip that back to support from resistance, okay? So that's, really the major things that I'm looking at on a larger scale. And one thing I do want to mention is you can also use these Fibonacci levels to find a breakout, right? And a possible reversal. So if we would have broke through these retracement levels rather than continuing the trend downwards, if we would have came up, consolidated, and broke through these levels, we could have spotted an upside reversal, right? And possibly retested, if not created a higher high compared to the previous high that we had. So now that we have our new swing high, all right, and we have our new move down, we're looking to see if we're going to get some type of retracement and continue the trend, or if we're going to get a retracement and then actually break through our levels and possibly retest our previous high here right around that $570 area. So that's some of the main things that I'm looking at right now, especially when it comes to the larger time frames like the daily chart. If we actually go forward and take a look at the 1-hour chart, all right, and we take a look at our MACD as well as our relative strength index, you can also use both of these to help give you guys some clues on the price action. Now, the first thing I want to highlight is that we do have a rising wedge, all right, where we've touched it here, we've touched it here, and we've touched it here on the top trend line. And we have a trend line here that we touched twice, and then over here that we touched twice again. So you can see price action is really zigzagging and starting to squeeze. Now, technically, this is a bearish chart pattern, okay? And if we break this trend line here, ultimately we're going to be looking for a move to the downside into our demand zone right around that 368 to about 373 level on leash. Okay. Now that doesn't have to play out. Okay. We could continue going up higher first, right? And we could actually break our trend line here to the top side. All right, break that, flip that to support, and continue heading up higher. Our major overall breakout level right here is going to be right around 404. So if we can get above 404, there is that chance that we could come up and hit our bullish price target. Remember, 404 was the level from the daily time frame that we flipped to resistance from support. And so, if we can break out past there, that's when we can come up and hit our first bullish price target of 415. But otherwise, you guys need to be cautious of this rising wedge, because in a perfect scenario, the rising wedge is going to take you back down to where the pattern began and started forming at, and that could take leash back down to that 370 area. Okay, so be cautious of that. Another thing to be cautious of is we have bearish divergence on the MACD as well as the RSI. So take a look how we have a high, a lower high, and a lower high. We have a high, a lower high, and a lower high. But if you actually look at the price of the token, right here, we have a high. Okay, and then we come up and we're making higher highs, right? And so we can see that we're making these highs and these higher highs. The token was actually going in an uptrend, but the RSI and the MACD were in these downtrends, and then we're continuing to reject these levels once we retest them. So if you want to look for a breakout, okay, what you need to see is you need to see this bearish divergence trend lines break on the RSI, flip that to support from resistance, and you need to see the same thing on the MACD, all right? A breakout, retest, and push higher. If you get a look above and fail, where you get a false breakout, that's going to be significant, because on the breakout, bulls are presented the opportunity to really push price higher. And if they don't take advantage of that opportunity and get the retest and push higher, then it's going to be a look above and fail and show that, hey, even though bulls had the opportunity and buyers had the opportunity to really push price higher, they didn't take control, and that sellers actually are still in control, and it's going to be a bearish signal. So be on the lookout for those. Ultimately, we have our retracement levels here of support now. Okay, after we've had a nice move to the upside, really, over the past few weeks. And so we've had this nice push now. And if we get a move down, okay, we're still going to be bullish above 382.39, because that's our 61.8% level. If we break below there and flip that to resistance from support, then that's most likely when we're going to see this rising wedge play out and take us to our demand zone. Keep in mind what I said about a look above and fail being an indicator of bearishness. If we get a look below and fail, this is going to be an indicator of bullishness, okay? Meaning that on this breakdown, bears are really presented the opportunity to push price lower than 382 back down into this 368, 370 demand zone. And if they don't take advantage of that opportunity and bulls push us back up into our range, that's going to be a bullish signal, right? So we have a couple things aligning here. All right, we have the rising wedge, we have bearish divergence. So you do need to be cautious, especially on this 1 hour time frame. You could say we have a little bit of an inverse head and shoulders forming right here that could take us back up to that 404 range. Let me draw that real quick for you guys permanently on the chart so you can see it. Okay, and we do have that. All right, kind of working for us if you're looking to make some bullish moves. But of course, we would need to really break the neckline right around this area, and then that's when we can possibly get that push up to 404. So, take all of this into context. Hopefully you learned something new. Remember, there's multiple different ways that you guys can really, learn and take advantage of, some of the things that I'm presenting here in this video. Ultimately, trading is like going to battle. It's like going to war. You need to have the proper weapons at your disposal. And then you need to know how to use those weapons so that way you can increase your odds of success on the battlefield, right? And, the more weapons and the more knowledge that you have, then the better chance you have of increasing your odds of success and finding what works for you, right? And, the same things aren't going to work for everybody. But, once you find out what works for you and gives you an edge, then that's when you can, really start to make some good money.